patterns that have worked where you've had the flag. All right, well, hello again, everyone, and welcome to the MarketSmith webinar. Today we're talking about high type flags. My name is Richard Marcus. I'm a product coach with the education team here at MarketSmith, and today we've got Arusha Pieris, who's collected some great examples of high type flags for us to look at today. For those of you that might be newer at this, a high type flag, quite simply, is a chart pattern that we use in addition to some of the more common patterns like cup with handle, double bottom, and the rest. So today we're going to focus on this pattern specifically and talk about the characteristics that these patterns have. Collected some great examples. As I mentioned, Arusha's got a few historical examples for us to look at so we can really get a sense of what these look like and how they work. And then at the end, we've put together a screen to look for some of these characteristics because there just happen to be a number of stocks right now in the current market that have some of these characteristics where usually we don't have very many. Usually we don't have any at all, and now we've got a few popped up that kind of look promising, so we want to give you guys this screen so you guys can get out there and start looking for some of these stocks that might have these characteristics of a high type flag pattern. Before we get into that, a couple of quick housekeeping items. First of all, this is an interactive webinar, and we do encourage your questions. If at any time you have a comment or a question, just go ahead and enter that in the question field here. That's located in the top right-hand corner of your monitor, and we'll do our best to keep up with your questions as we roll along. If we have time, we'll have a dedicated Q&A session at the end of the presentation as well. Know there's a lot going on in the market this morning, so we're going to try to keep this on the short side, just kind of forewarning there. Last thing, quick disclosure. There are going to be several individual stock examples given during this presentation, so I want to make it clear nothing we say in this presentation should be considered a recommendation to either buy or sell a security. These examples are just for demonstrative or educational purposes only. All right, with all that out of the way, Arusha, why don't you hop on here and let's just kick this off by talking about the characteristics of these high type flag patterns.
All right, okay, thanks, Rich, and hello, everybody. And yeah, let's just go right into the basics of a high type flag. And so pretty much this is stated in the How to Make Money in Stocks book. But what we're looking for in a high type flag is an initial move of 100 to 120% in 4 to 8 weeks. And so don't get necessarily tied up in the exact numbers at this point. What we're looking for is a super strong move in a short amount of time. Okay, so the institutions are falling over themselves to grab as many shares as possible. And so now you have this really, really strong move. The stock is super extended, and now it starts to correct a little bit, and it goes sideways. And the amazing thing is that it doesn't correct much, right? 10 to 25% in only 3 to 5 weeks. And so here's this move that goes up, it doubles. And now over the next month, it takes a little bit of a break, and no one wants to sell the stock. And in fact, those who are selling find happy buyers there who will continue to scoop up more shares. And then finally, the stock is able to break out of this and shocks everybody and can continue to move up even further. Now, I was a little conservative here. In the book, so I had some can move 100% or more from this formation. In the book, it said some can move 200% or more. So I wanted to be a little bit more on the conservative end just to keep things in perspective here. Not all of these are going to work, okay? And not everything is a high type flag, okay? So after you see some of these examples, don't go running around and thinking that everything that you see is going to be a high type flag because they are rare. They're extremely rare, and we only see a few in every bull market. But the reason why we wanted to go over it now is because this is one of the few times that I remember seeing that there are a number of examples that have that potential for the high type flag, and there are a few that have formed high type flags, in my opinion, and have broken out of them and are working pretty well so far. So that in that respect, it's kind of unusual. Now, here is what a high type flag looks like. And to probably all of us, this is a super extended stock, right? And it's just straight up. And sure, it'd be nice to try to hold on to this whole move right here. Now, Rich, I'll play a little Where's Waldo here.
Sure.
Here's a stock that's going straight up here. Let's see if you can pick out the high type flag.
Well, I would say the flagpole looks to be right here. These blue bars going straight up here in a short time period, and then this kind of sideways action would be your flag.
Yeah, you nailed it. You absolutely nailed it. And so here is the stock, right? Here's that super strong move. 100 to 120% in only 4 to 8 weeks. And so you can see here, these are institutions just falling over each other. Notice just how quickly it moves up in such a short amount of time. Notice how it finishes at the top end of the range too, right? So there weren't enough shares here, and the price just went through the roof. Then suddenly, you see the stock correct and sideways. So you can see here, now this is 3 weeks. These are institutions just falling over each other. There's a lot of whipsawing going on here. But notice how it just closed around the same range each week, around the same price, right? It wasn't that far away, and also kind of finished in the middle of the range. So while during the whole week it was probably really tough, and if you're watching your account too closely, it's very easy to get shaken out. But at the end of the week, they just magically kind of closed around the same area. And then finally, and so what we are doing here, when you see a pattern like this, you're looking at and saying, okay, the peak of the pole, that's my entry point. I'm going to use that at 10 cents. And I'll give you my buy point, and then you finally have that breakout. And so at this point, when no one else thinks that it can't go even higher, this stock just seems to be getting started at this time. And so it's very rare where you see this. So stick to more on the conceptual level. You're seeing this super strong stock move up, and then no one wants to sell it. No one wants to give any of their shares away, which is amazing, after their prices doubled. Right, so super strong stock corrects a little bit and then takes off again. It's not waiting around too long to go through the normal base. And so this was JDS Uniphase right here. And so the intention really of this webinar was to give you a few examples that you can pull up in MarketSmith. And we're going to give you the dates here. And so write them down, pull it up using the change date feature in MarketSmith, and start studying these. They're very rare, but if you can catch one of these, wow, I mean, that can make your year. Right there. So it's not easy to find, not easy to handle, but the more you study it for these few examples that we have here, the better prepared you will be for the next one that comes around. Okay, so JDS Uniphase, on the weekly chart, it broke out on December 24th, 1999, and here it is on the daily chart. All right, so this was actually December 21st, 1999, and here's JDS Uniphase breaking out. And be honest, how many people would be brave enough to try it at this point, right?
Yeah.
But notice that here's that strong move on the daily chart, and look at that whipsaw action, just all over the place, right? And even that nasty shakeout here. And Rich, I'll be honest here, I'm probably not going to be holding on during this time.
It would be tough to hold, and it's certainly whipsaw action. But when you kind of put it in the context and think about proportionality, you've got this big move up. And yeah, these spreads are pretty wide, and it would be pretty hard to hold. But when you compare these two, it's pretty obvious that you've got a lot more buying going on throughout this whole move, and not very many people selling, right? The amount of people selling here compared to the amount of people buying here, you've definitely got the scale tipped in the side of demand, right? And people are still in demand of this stock. So try to look at this kind of in context and kind of burn this image into your brain. This is strength. This is a really good thing to see. And there's a lot of stocks. I guess I shouldn't say a lot of stocks.
Yeah,
I could think of a few stocks out there right now that look pretty similar.
Yeah, I would agree with you. Now, I think another example that this another lesson this will that teaches you and you'll get more lessons out of the change date is if you get shaken out, and a lot of times I'll get shaken out right here, Rick. You know, see that low? That's exactly where I'll get shaken out, and then it moves on, and you feel sick. Okay, and you hesitate, and it keeps going up. At this point, when it's breaking out again, you have to buy something back at least, right? I mean, there's a point where you have to be flexible and say, okay, I was wrong to sell. I was wrong not to move quicker into this. I have to get something out of this, because if you don't get it in here, you're gonna be kicking yourself when the stock has a chance, and the stock's breaking out a high tide flag potentially, and going up another 100%. Imagine you get shaken out at the very low point, and you still buy at the breakout. You still capture 100% at that point, or you capture a portion of that 100%. Okay, we're not going to always catch the exact 100% of it, but you catch, at least you're getting something at that point. So don't get caught up on selling at the lows and stuff like that. If you start seeing on the chart that it's doing something, that it's breaking out of some pattern at that point, Get over that mistake that you made, and don't let that second mistake become the first mistake become a second mistake, and be caught flat-footed as it keeps moving up at that time. Okay, so this is one example that definitely go back, pull up the change date feature, and study this. Go week by week, day by day, and start getting a feel for this, because, man, when you look at this daily chart here, this is what you're in for sometimes. For some of these stocks, they are going to whip you around, and this is really just setting up, which is amazing at this time. And so now if you're waiting patiently, and now you're waiting for that breakout at the high tide flag, now go day by day and study how it handles after that, because it's probably not going to be an easy ride, but it'll be well worth studying. So that's the first example right here. Now here's the second example I'm sure you are all familiar with, but this one is well worth studying. It's a very, very unusual one, because it actually had two high tide flags. And so this is Taser. So I identified one of the breakouts here. Okay, so back September 19, 2003 on the weekly chart, this is the breakout. And so you want to just train your eyes to recognize this one. And I remember this one, Rich, back in the day. And I don't think a stock has ever made my heart beat so fast, because this thing was all over the place every day. It was the stock, and I think everyone was watching it at that time. It was amazing.
Yeah, I mean, that's the thing about these high tide flag patterns is when you have a move like that, all eyeballs are on it, right? It's something that attracts a lot of attention, and that's what creates a lot of the volatility, but that's also what creates the demand that fuels the move. So, know what you're getting yourself into when you jump into one of these stocks. I mean, this is something that's going to whip around and move very quickly in both directions. But that's the trade-off, right? You exchange the high risk for the high reward.
Yep. No, exactly. And then you also manage the amount you're putting into it too, because when you're dealing with some of these more volatile stocks. Now, the interesting thing here is, even though it was so volatile during this run, look at on the weekly chart how it removed a lot of the noise and kept finishing pretty much at the top of the range every week, and it kind of consolidated over here. And so these are some of the things that I immediately noticed. Like, well, that whole week, while it was very, very tough, by the end of the week, it kind of revealed its true self and showed that it still had potential. And here's the look on the daily chart. So if you got whipped out, say you sold out at 2041 at the time, and maybe you were in that first run at that point, and now it's breaking on again, this is where you have to kind of switch that frame of mind and get over selling at the lows. You're never going to do these things perfectly, and try back in it again if you think it is breaking out of a pattern this time. And look at this one. This is amazing.
I want to address a question here, if it's all right, Arusha. Someone's asking about what you want to see volume doing during these patterns, and I think this is a pretty good example in terms of the volume. You see on the way up here how high that volume was. So a lot of demand. That's really the profile of these high type flags. You got a lot of demand pushing these prices higher, and then as it takes a break, notice what happens to the volume. It's pretty high in some cases, but overall you're seeing volume kind of dry up as the number of people willing to sell this stock completely drops off, right? As this thing kind of moves sideways, there's fewer people that want to sell it. And then look at the volume on the breakout. It's huge. So pretty similar to what you want to see with other patterns as well, that the same kind of volume activity. But don't feel like you have to have that either, because there have been a lot of high tight flag patterns that have worked where you've had the flag portion be very volatile and choppy, and volume spiking in there as well as more people come into the stock on these days with huge spreads. So don't feel like you have to have this type of volume, but this is nice to see. I like to see this in my high tight flags. You're not always going to get this though, so don't let that persuade you not to buy a high tight flag when you see a lot of volume in the flag area.
Right. Yeah, this is almost picture perfect. They're not always going to look anywhere near as good as this, but so remain flexible. I think really another kind of key point with this whole webinar is remain flexible. Keep it on the conceptual level. You're looking for those strong moves. They're not always going to be perfect at this time, but sometimes don't let that shake you out if you don't have everything. It's kind of like there's not a perfect stock when you're analyzing the fundamentals and technicals. Same thing with the price action. If it has most of the things right, a lot of times you're better off giving it a chance, as long as it's not forcing you to sell out of it and hitting a stop loss of yours. So this is Taser on the daily chart. The date, September 17, 2013. Pull it up on your change date and go day by day on this and see how volatile these things are. but it's well worth going over, and we already went over this. This was a super, super strong move. In fact, you probably could say that, this might have had another high tight flag up here, maybe another one up here, right? So it maybe doesn't fit exactly, but on the conceptual level, it's a strong move up, not giving anything back, and then moving up again. And so this was a very, very unusual high tight flag. High tight flags are rare now. A super high tight flag like this stock is even more rare, and we don't see these too often. Now, the final example is a classic. Here's Qualcomm, one of the best stocks in '99, and here it had another high tight flag, and this one's kind of interesting because I almost see two high tight flags here again. Now, the classic one is right up here. So imagine this. Here's a stock that broke out of a cup of handle back down here, goes on this amazing run. Now, I kind of see another high tight flag here. Also, maybe doesn't fit exactly the definition, but strong move up, doesn't get too much back, has a nice shake out and then jumps out of it again. But here, this is more, I guess, a traditional one. And imagine this thing has gone up through, 5 times, even more than that,
very extended,
and then forms a high tight flag too. So sometimes, if you're kicking yourself by missing it, I saw this stock back at 30 and it's 180, I missed it. Sometimes it may give you another chance to get into it if the market is that strong. So here's a nice view of the weekly chart for Qualcomm, and this is how it looks on the daily. And this is a little bit more unusual, but this is how strong this stock was. It refused to make a lower low during this time. So it's almost like it's not an ascending base, but it kind of has that spirit of an ascending base.
It's kind of wedging higher in the flag.
It is kind of wedging, yeah, right.
But I mean, that just shows you how few people were willing to sell the stock. I mean, look at the volume here in the flag area.
Yeah, that's
volume
amazing.
Completely dried up after these huge skyscrapers on the way up. Now nobody's willing to part ways with their shares, and so it just shows you that you've got a stock it's in huge demand. Everybody wants to buy. No one's even thinking about selling. So this is really your only chance to really get in the stock before it takes off again.
Yeah. And another one, and some of these examples here, they could serve as historical precedents too when you're going and looking some other ones to try to help yourself handle some of the current high tight flags that might be out there. All right, and then this one, of course, also went on this monster run, 100%. We're being conservative here, over 100% move at this time. Even if you caught that, and actually missed out of this, but you still catch a little bit of this, you're still pretty happy at that time. So these were really the 3 examples that we wanted to go over. It was more just to give you some templates to go and start studying, but we've never really covered this topic before. And since we started seeing some that have the potential to be high tight flags, we figured we might as well go over this and make sure everyone's on the same page on this one. So, Rick, you want to go over, you created a nice little screen here for high tight flags. You want to go over this?
Yeah, let's talk about how to access this screen so you guys can start looking for these patterns yourself. And then, Arusha, don't let me forget, after we share the screen, we want to talk about how to use this screen properly and kind of how to handle some of these high tight flags that we're seeing right now in the current market before we wrap things up for today. So to do this, I'm actually going to pull the website up and just kind of show you where to access this, because we always get a lot of questions on kind of where to find these screens once we share them. Any screen that we build and make available to you guys, you're going to want to come to MarketSmith.com and then click on Community. That's kind of top dead center here on the home page where we have all the shared content. This is where you come for blogs and forums and the like, but screens are here in this Shared Screens tab. And since we shared ours more recently than anybody else, it's sitting right here up at the top of this page here. The title, for those that are looking for it, is Potential High Tight Flags right here. And to track the screen, you're just going to click on it. This button here is going to say Track Screen. You're going to click on that to add that to your Track Screens folder. And then you're going to hit View Screen, and that's going to take you into the tool so that you can actually use this particular screen. So let me pull this up here and we can take a look at it. Here it is in the screener. You can see the name Potential High Tight Flags right here on this orange row. And let's talk about what's in this screen. I'll kind of explain my thought process behind building this particular screen. The first 3 items are real simple. I'm just looking for stocks with a composite rating of 70 or better, just to make sure we don't have stocks that I wouldn't actually consider buying here in the results. And then some price and volume minimums. We don't want any stocks less than $15. We don't want any stocks that trade less than 250,000 shares. This kind of just sets up the right universe that we'll want to look in. And the last criteria is the one that really is the most important. I'm using the percent prices up in the latest 3 months, and I'm saying only give me stocks that are up more than 100% over that time period. And the reason that's significant is Arusha talked about the requirements of a high type flag. You got to be up 100% in less than 8 weeks. I'm looking at 3 months here, a little bit longer than 8 weeks, because I'm trying to adjust for the fact that some of them might be in the flag area, which could be up to an additional month, right? So all said and done, this high type flag pattern is about 3 months long from start to finish. If you're up 100% in that time frame, there's a pretty good potential that you're either forming the flag or still in the pull portion. Either way, these are stocks that should be on the watch list, ones that you're kind of doing the analysis on already, so you're prepared to buy that stock when it breaks out. So it looks like if you look down here, results, we're not going to go through the results today. There's only 6 of them right now, so you guys should be able to go through these pretty easily on your own. But I just want to point out that this is pretty typical, right? There's usually not going to be very many stocks in this result set. Oftentimes there'll be 0. Right? In most market situations, there will be 0. The reason that this is a relevant topic for us to discuss right now is because that's where we are now, right? I don't really like in the action.
Rare, and that's the problem. But we haven't talked some questions on it.
All right, Arusha, let's kind of review the putting it into practice. If we want to go after high type flags right now, what do we need to know?
Well, the big one is that they are very volatile. Okay, so there's more risk to it. So make sure you know your exit strategies on this. That's the big one. Definitely go back, study these examples, and go use the exchange date to go day by day. So you're getting familiar with how rare and aggressive these stocks are. Because one thing that we know in Wall Street is if Wall Street wants a stock, right, and they don't have enough of it, they are going to do everything they can to shake us out of it. And it's amazing at how often they get me. It's unbelievable.
Yeah.
The big thing is trying to just pick yourself up and get back on it when it's showing you that you were wrong with that sell at that point. So with a high tight flag, that's even more to the extreme because they push it up so fast, and the story apparently is so good at that time that all the funds want it. And so just be prepared for it. Look at those examples. Now look at the How to Make Money in Stocks book. There are a number of other examples. We had another question here going over a not so perfect high tight flag. There are a number of examples in the How to Make Money in Stocks book which are not perfect high tight flags. But keep it more to the conceptual level. Strong move up, not giving much back, and now a pretty nice breakout out of that.
All right, Arusha, let's get to the questions because we do have some good questions coming in here. Remember, guys, if you have questions, just enter those top right corner in the question field, and we'll get to as many as we can. The first one has to do with these breakouts that fail in a high tight flag pattern. If you find yourself getting shaken out, you're down 7-8%. How do you handle that shakeout? I think that just like any other pattern, correct me if I'm wrong here, Arusha, is you got to have your portfolio management rules in place. Sell if you're down 7%. Don't mess around with that, especially with a high type flag, because those losses tend to develop a little bit more quickly than other patterns. Yeah. But the other thing is keep that stock on your watch list, because sometimes these high type flag patterns, they will take several attempts before you get a clean breakout that works. So maybe this week is not the week. Maybe it needs to shake out a few more people, or maybe the market weakness has to kind of dissolve a little bit before it has a better chance at a run. And you can always buy it back. I know it's kind of a cliche that we always say, but especially with high type flag patterns, you want to keep that real high up on the watch list and keep watching that every day, because you probably will get a few attempts before you get a clean breakout that works.
Yeah, I'll just add, number one rule is protect yourself. It doesn't matter what type of pattern it is. You have to protect yourself, and you have to be even more careful with the high tight flag, because as we know, what goes up really quickly comes down pretty quickly too. So if you're wrong in your analysis, or for whatever reason the market is just coming down, and these high tight flags are going to come down like everything else, they're probably going to come down a lot faster too. So you always have to protect yourself. Always know your exit strategy.
Now, Arusha, this is kind of an abstract question. Hopefully, we can come up with a good answer, but. We mentioned that in usual or typical market cycles, there's really only one high tight flag pattern. Sometimes there are none. but now we're seeing a few that fit the profile. I mean, is there anything that you can glean about, or anything that you can assume about this market environment or about these stocks in general? I mean, what might be the reason that we're seeing so many of these right now?
I think it's tough to know exactly what the reason is, or even guess on the reason. I think the big thing is that what is the chart saying? What are the charts saying? All right, we have this really interesting environment where we all know what's going on in Washington and all the noise that's happening there. Then you also have the market indices showing a lot of distribution and telling you to be careful, but then, and which you obviously have to be, and take that very seriously. But then the other thing is, you're seeing a lot of underlying stocks that are continuing to work throughout the whole year, and a number of them have been working spectacularly well. And that's the amazing thing. I think that's the amazing lesson that I've seen out of 2013 so far, is there are a lot of stocks working, and on top of that, there are stocks that seem to be setting up or have set up or informed high tight flags. There's a lot of there just seems to be there's a lot of power to a lot of these leading stocks, to the growth stocks. That's something that we haven't seen in a while too. You know, the growth stocks really seem to be in favor, but it's not obvious yet. But on the charts, they are. So you want to really be paying attention to these stocks' potential, because these with growth potential, because there's a lot of power there, and so keep an eye on them, because they will set up.
Yeah, I think you nailed it, Arusha. I mean, it's certainly a stock picker's market right now, and if you get in the right stocks, the ones with the best stories, the ones that are doing something really innovative, and that have these spectacular chart patterns, you'll be able to dodge some of the market weakness and volatility that we're seeing. So I think that's absolutely right. Last question here before we wrap things up. Looks like we're coming up on the half-hour mark. Is exit strategy. I mean, most of the time we're trying to take our profits at 20% following a breakout. Do you treat high type flag patterns any differently, or is it the same game plan?
That's a good question, because sometimes I think it really depends on how much you believe in the story. That goes back to the fundamentals. And the nice thing, it doesn't have to be all or none too. If you're up 20%, you want to take some off, go for it. That's never, in my opinion, that's never going to hurt. I don't think it's a bad idea to scale out. It gives you a chance when the market comes in to scale back in it at optimal times too. You're probably in a better frame of mind at that time. Now, the exit strategy, obviously, on the other side is the 78%, where you have to cut your losses. But yeah, the 20% is interesting. Probably for the most of the stocks, you should be taking 20%. And now, if you think you're coming out of high tide flag and stuff like that, give it a little bit of room. But I always like taking a little bit off the table, maybe because I just don't have the stomach to hold through the whipsaws.
And I'll just add there that, you know, if it's kind of your approach to kind of always be looking for one of your positions to designate as kind of a core position, one that you want to hold longer than the rest, having a stock break out of a high type flag pattern kind of lends itself a little bit more to that type of a, you know, quote unquote core position, right? But you still have to kind of look objectively at your whole portfolio and decide which one do you really believe in the most. It's got the best story, the best patterns. For me, if I have a high type pattern, that weighs very heavily in that decision. But I'm still almost always taking at least some profits at 20%, like Arusha is saying. It just makes it easier to hold for a longer move once you've done that. But thanks for the answer. That's great. I think that about wraps things up for us here today.
I thought this was going to be quick, Rich.
Sorry. Nothing's ever quick whenever you and I get on a webinar together, but hopefully nobody minds. With that being said, if you guys have any questions we didn't answer, keep in mind you can always give us a call or shoot us an email, 800-424-9033. Or shoot us an email at reachus@marketsmith.com. As always, look us up on Facebook, Twitter, StockTwits. We're on LinkedIn and YouTube now. We're all over the place, all over the social scene. So look for MarketSmith on all your social networks to kind of keep up with our announcements or market commentary through any of those channels. But that about wraps things up for us. Like I said, on behalf of Arusha, myself, the rest of the